And compared to BlackBerry's awful year, 2013 has been a stellar one for Facebook. Sure, it was rough for a few months early in the year with the lawsuits and plummeting stock values, but over the past 6 months, its shares have soared. Now it's just been added to the S&P 500. Karina Huber has more on Facebook's wild year.
Facebook's IPO was a disaster on all fronts. There were trading glitches at the NASDAQ, accusations that Facebook gave preferential treatment to its underwriters, and withheld information about its mobile revenue projections. This led to a flood of lawsuits against Facebook, CEO Mark Zuckerberg, the NASDAQ, and the investment banks that handled the offering. The stock tanked from its initial price as investors worried about its mobile strategy. The company has come a long way since then. Its shares are trading considerably higher than on opening day on May 18, 2012. It's also just been added to the S&P 500, an index of America's 500 largest companies.
The last 6 months have been, to a certain extent, validation that social media is going to be a static part of the marketing world.
It really validates its business model, its profitability, and its perceived staying power.
Kessler says investors flocked to Facebook after it demonstrated it could monetize mobile. Mobile advertising now counts for almost half of its overall ad revenue.
The approach that Facebook has taken, which has really become embraced across internet, social media, and mobile over the last year or two, is this notion of native advertising.
Native advertising refers to ads that appear as sponsored stories. They look less like an ad and are tailored to an individual's interests. Scott Galloway, clinical professor of marketing at NYU's Stern School of Business, says native advertising is working.
So there's a small, very vocal community saying that advertising is a total sellout and it's misleading. But the consumers seem to be voting and watching these advertisements, engaging with them. So we're going to see a lot more of this type of advertising.
Users are also going to see a lot more video ads on their feeds. They debuted this week, which means Facebook is now competing with TV broadcasters for coveted advertising dollars. S&P Capital IQ thinks this will boost the stock even further. It has a buy rating on Facebook with a 12-month price target of $58 a share.
Facebook shares already have a high valuation. They are trading at more than 100 times its earnings. Now, that may be high for the overall market, but it's actually low for the social media space. LinkedIn shares are trading at more than 700 times earnings. And Twitter, which isn't even profitable yet, has seen its share price soar since its initial public offering. All of this indicates investors think social media is here to stay. Karina Huber, CCTV, New York.